Good afternoon, everyone. Thank you for joining us today. I'm Franny Cooper from Monterey Bay Economic Partnership, and we're very pleased to bring you this program today. We've been hearing from lots of businesses that financial relief is top priority for them. And there's been a lot of confusion in navigating the packages at the state and the local level. So hopefully this presentation will provide you some clarity in your process for getting financial relief due to the COVID-19 crisis. I'd like to thank our sponsor, Santa Cruz Works, who is a valued MBEP member and is a great partner in all that we do. And our speakers come from two valued MBEP member organizations as well, PP & Co. and Santa Cruz County Bank. They've both provided us lots of support through this crisis. We have plenty to cover, so let me introduce our speakers. Ron Zraick is a director at Petrinovich, Pugh & Company, or PP & Co., an independent CPA firm with offices in San Jose, Santa Cruz, and Portland. Right now, he's focused on business consulting and business development, although through his 35-year career, he's had roles as CPA, CFO, controller, general manager, and business owner. Ron has played a key role during the pandemic in PP & Co.'s communications to clients. And then Angelo DeBernardo comes to us from Santa Cruz County Bank, and he has been there for 17 years. He's now EVP and Chief Lending Officer. As most of you know, Santa Cruz County Bank is a leading SBA lender in both Santa Cruz County and in Silicon Valley. Within the first year of administering the SBA lending program, he achieved preferred lender status from US SBA for Fresno and San Francisco District. He has over 30 years in community banking experience and serves on the board of Santa Cruz County Chamber of Commerce. And with that, let me turn it over to Ron.
Good morning, Franny. Thank you so much. Let me now share my screen so everybody can see the presentation. And let me get to my notes. Thanks again, Franny and Maya Reed and everyone at the Monterey Bay Economic Partnership for arranging this, and to co-presenter Angelo DeBernardo from the Santa Cruz County Bank. Angelo is going to tackle the Paycheck Protection Program, which in my opinion is the most challenging and provides the most meat for our members. I'm going to forward the PowerPoint, or we're going to forward the PowerPoint to you afterwards. So don't worry about taking notes or photos or slides. If you want to take a photo of me, that's fine. I don't know why you would, but please feel free. There's a lot of content here. I'm going to move through it quickly. Some of it I may have to skip. I want to make sure there's plenty of time for Angelo's topic. I'm going to start with the California Relief Grant Program because I think that, along with the PPP, is going to provide the best opportunity for our participants to garner funds to help them with their businesses. And also at the end, I'll have my contact information, so feel free to contact me afterwards and I'll be happy to answer any questions. So let's get rolling. The California Grant Relief Program is a $500 million program administered by the state of California. It is the first round of applications closed on January 13th. The second round is going to start on February 2nd. Now, if you were able to get your application in the first round and you received notification that your application was approved, you should be seeing funds shortly. They say funds will be dispersed January 22nd for 45 days thereafter. Again, round two opens February 2nd. It's a short window for round two. It goes only to February 6th. And if you entered your application in round one and it's complete, and you didn't receive notification that you were awarded a grant, it will be automatically rolled over into round two. Important to note that grant proceeds are taxable.
I'm sorry to interrupt, but we're not seeing your slides. Are you sharing your presentation?
I thought I was. Let me try again.
We can see it now. Thank you very much.
Okay.
Sorry to interrupt.
So let me just make sure I'm sharing the right screen. Now, can you see California Relief Grant Program?
Yes.
Okay, how about my notes? Can you see my notes?
No.
Gosh, I hope not. Good, okay. Let me keep going. The grant proceeds are taxable, but unfortunately, frankly, for most businesses, you're not gonna have a lot of taxable income in 2021. So work with your accountant, I wouldn't worry about that. You can find grant relief information and what they call grant relief partners at the website down below, californiareliefgrant.com. So what's available? Grants between $5,000 and $25,000 are available, depending on your gross revenue. Gross revenue is a minimum of $1,000 and a maximum of $2.5 million. And businesses, independent contractors, and sole proprietors and nonprofits within that range can apply for grants, again, between $5,000 and $25,000. On the left, you'll see I have the websites again for California Relief Grant and for one of their partner agencies. So who's eligible? Small businesses or nonprofits qualify, again, with revenues of $1,000 up to $2.5 million, active since June of 2019. You must be operating or have a clear plan, and I put that in parentheses because I don't know what that means, frankly, to reopen when permitted. Your business must have been impacted by COVID. And this is really important. I can't emphasize this enough, and I'm sure Angelo will emphasize it too. When you're going to the government, to a bank for funds, your application should be as complete as possible. And I'm going to give you some information on that and what you need to provide to the government. Owners of multiple businesses, you can only apply for one business, and that would be the one that has the highest revenue. So how will the grants be determined? Whoops, sorry, I went one slide too many. How will the grants be determined? First, again, is the grant application complete? Then the grants will be determined under the following criteria. There's going to be an analysis of where your business is located based on the color-coded tier system, what they call the blueprint for a safe economy, and any regional stay-at-home orders. So to put it briefly, if you're in a purple zone, you probably have met that criteria. They're then going to look at industries, sectors that have been impacted the most. They didn't give a list of industry sectors that have been impacted the most on their website, but I think we can gather that it's going to be restaurant, entertainment businesses, salons, bars, etc. Again, I don't know how that criteria is going to be determined. The next criteria that they're going to look at is the business majority owned and run and managed by women, minorities, persons of color, veterans, and are the businesses located in low to moderate income and rural communities? So there's a lot of criteria for these grants. Doesn't mean you shouldn't try to get one. So again, go to the California Grant Relief website. Their partners who help businesses manage the process are on there. As far as I can see, there's no charge for working with those partners, and they, like a bank with the PPP, will help get you through the process. Now, what businesses are ineligible? Businesses that are not in California, nonprofits that are not 501c3 or C6s, government agencies other than Native American Indian tribes, lobbying and political based groups, businesses with passive investments. So if you're a passive real estate investor, you're probably not going to get approved. If you are a member of an LLC or a partner in a partnership and you're a silent, non-active partner, you're probably not going to get approved. There is one criteria on here that I'm not sure makes a lot of sense, and that is they're eliminating anybody with a Schedule E on their tax return. Just because you have a Schedule E on your tax return doesn't necessarily mean you're not running an active business. So don't look at that as a criteria that's going to totally eliminate you from contention, so to speak. Churches and religious organizations, lenders, predatory businesses, businesses of a prurient sexual nature, and businesses that have activities that are illegal under federal, state, or local law. Now, this is important for our cannabis businesses. They have really gotten, we do quite a bit of business with cannabis companies, and they have been locked out of the PPP, and now they're being locked out of these California relief grants. And I really think that's too bad because they're a big part of our economy. And then any business that has an owner that quote unquote was in trouble, either with a civil judgment, a criminal conviction, or this one maybe isn't fair, is currently being charged for a criminal matter. So that's the California Relief Program. I just want to make a couple of mentions, and this is just my opinion. In addition to working with a California Relief Program partner, simultaneously work with a lender to get a PPP. I didn't see anything that precluded you from doing both. Both can be grants under the right circumstances. And again, Angelo from the Silicon Valley, Santa Cruz County Bank will cover the PPP loans in much more detail. All right, let's talk about the most recent COVID relief package that was signed into law on December 27th, 2020. But before we do that, we really need to provide a little bit of background. We have had 6 COVID relief packages passed in 2020. I've listed 4 of them here, but there were 2 that were passed beforehand, having to deal with, the first one had to deal with providing medical funds for medical and for vaccine research. The second one had to do with family leave and sick leave. But these are the ones that got the most attention, I think. The CARES Act was the big one on March 27th. It was a $2.2 trillion law that was signed on, again, March 27th. Then the Paycheck Protection Program and Healthcare Enhancement Act was $484 billion. The Paycheck Protection Flexibility Program, and then most recently, the $900 billion COVID relief package that was part of the Consolidated Appropriations Act. If you add all those up, it's $3.785 trillion worth of relief in 2020, and President Biden is proposing another $1.9 trillion bill in his first 100 days. So the CARES Act, again, a little bit of background so we can talk about the CAA. Here are some of the important provisions in the CARES Act. It created the Paycheck Protection Loans. It enhanced the Economic Injury Disaster Loans. It created an employee retention credit. It created a deferred payment of employer payroll taxes. Later, then President Trump issued an executive order that allowed for deferral of the employee's portion of payroll taxes. From a tax standpoint, and this can be important for business owners to look at prior year's tax returns, it changed the interest expense deduction limitation. It changed the rules for net operating losses. It removed the net business loss limitation, and it changed the depreciation for certain improvement property. Now, these are all, the last few that I mentioned are all provisions that if you get together with your CPA and look at your prior year's tax return, you may be able to go back and amend that return and free up some money. The Paycheck Protection Program added a little bit more money for the for paycheck protection loans. It added some more money for healthcare expenses, and that was in April. Then in June, the Paycheck Protection Flexibility Program was passed. This did two important things. Well, three really. And again, Angelo will cover this more. It changed the covered period from 8 to 24 weeks. It allowed businesses to use less money on payroll and still get forgiveness. And it also made it easier to obtain PPP loan forgiveness if you couldn't replace your full-time employees, and allowed employers to defer the employer portion of the 6.2% FICA tax, even if the PPP was forgiven. The original CARES Act would not allow that. So what is the Consolidated Appropriations Act? Well, in December, a $2.3 trillion bill was signed into law. It was nearly 5,600 pages of legislation. And in that $2.3 trillion bill, there was $900 billion in long-awaited business and individual relief for COVID. Remember, it was over 6 months since a bill had been passed. The first three bills were passed within 10 weeks. The fourth significant bill that provided relief took more than 6 months to pass. Again, it's one of the longest bills in the history of Congress. God bless them for getting through it so quickly. Let's talk about some key provisions of the CAA, the Consolidated Appropriations Act. They added $285 billion in additional funding for PPPs, $40 billion for EIDL, economic injury disaster loans, $20 billion for loans, and another $20 billion for grants. This is a key provision. They changed the ability to deduct expenses on forgiven loans. They're now going to allow deductions for expenses on forgiven loans. They created something called live venue grants, which I'll go into in a little more detail. They extended the employee retention credit. They extended the Emergency Family First Coronavirus Response Act through 2021. And they added what we call the 3 Martini lunch deduction. Again, I'll get into that in a little more detail. So what about individual provisions? Those were business provisions. Direct payments, recovery rebates, expanded unemployment benefits, medical expense deductions, charitable contributions, retirement relief, and housing relief. And we'll get to these. So let's look at some of these in a little more detail. Before the CAA, PPP loans were not, forgiven PPP loans were not included in gross income of a company, but the forgiven the expenses that were paid with that forgiven loan were not deductible. Then Secretary Mnuchin came out with a statement. The IRS came out with a revenue ruling. Senators Grassley, Wyden, and House Member Neal, from the very beginning, were advocating to have the expense deductions allowed, because really, it's not a grant, if you will, if they keep the income off of your tax return, but they make you keep and they don't allow you to take the expenses. So that was fixed with this CAA, in that now businesses do not have to take into income the forgiveness of a PPP loan, and they can deduct the forgiven expenses, if you will, from their taxable income. Side note, California has a law that says that the forgiven loan is not income, but within that same law, it says that the expenses that are forgiven are not deductible. So as of today, California has not complied with the feds. We hope they do. I'm not holding my breath. Let's talk a little bit about live venue grants. This is a $15 billion program through the SBA to assist live venues and those who work with live venues. Now, in an entertainment area such as Monterey and Santa Cruz, San Francisco, Oakland, this could be very important. Live performing arts organizations, talent representatives, movie theaters, qualified museums, all qualify for these grants. There are a lot of detailed requirements to qualify for each of these. I've listed them here. I'm not going to go through them in detail, but generally, your income had to have fallen by at least 25%, and you intend to resume your business as soon as you can. They're going to be issued in tranches. The first tranche will be for those businesses with 50 employees or less who lost 90% of their revenue. The second tranche, 50 employees or less, lost 70% of their revenue. Third tranche, 25% of your revenue. I guess there's a fourth tranche. If there's any money left, then anybody can apply. I checked the SBA website. Again, this is going to be administered by the SBA. And right now, as of yesterday, the SBA is not yet taking applications. It took a while for the SBA to get up to speed on the PPP loans. I'm sure they're still working on the new requirements for PPP loans. And it's going to take a little while for them to get going on the live venue grants. Another provision under the CARES Act that was extended by the Consolidated Appropriations Act is the employers getting a refundable credit against qualified wages for an employee. Under the CARES Act, the credit was more limited. Under the Appropriations Act, the employers get a refundable credit equal to 70% of qualified wages paid to an employee. The eligible wages are capped at $10,000 per quarter. So if you have an employee that's making $40,000 a year, you can get a credit of up to 70% of those wages against your Social Security payments. The program ends in mid-June. Employers qualify based on the information that you see here. You had to be in existence at least since 2019. Under the old rules. Under the new rules, you don't have to be. You could be in existence in 2020 and forward. And employers who receive a PPP loan may still qualify for the employee retention credit with respect to wages that are paid but not forgiven. Now, this is an important planning tool because of the change in the PPP loans and allowing only 60% to be applied to wages and still be forgiven. You should talk to your payroll provider and your accountant about how you might be able to maximize both your employee retention credit and your PPP forgiveness. There was some deferment of employers' payroll taxes. That is over as of December 31st, 2020. But you can pay the payroll taxes that you deferred in 2020, employer's portion of Social Security taxes, half by December 31st, 2021, and half by December 31st, 2022. It was originally not allowed under the CARES Act if an employer had a PPP loan that was forgiven. It has been since modified to allow deferral even if you have a PPP loan that's forgiven. So you can see, as far as payroll, there are a lot of moving parts here. And talking to your payroll provider and your accountant about how to best maximize your credits and your deductions is very important. This is the 3 Martini lunch deduction. Since 1994, entertainment and meals expenses have been limited to a 50% deduction on your tax return. In 2017, entertainment expenses were eliminated. You could still write off your lunch at 50% or your dinner. For the next 2 years, meals are deductible as to 100%. Now, this is in my opinion, and this is Ron Zraick's opinion, this isn't the Monterey Bay Economic Partnerships or even PP&Co's opinion, this is mine. This is a pretty feeble attempt to address the crisis caused by COVID in the restaurant industry. There was a $120 billion Restaurants Act that passed the House in October as part of the HEROES Act, and actually was folded into the HEROES Act. It was a separate legislation. That's what should have been done for the restaurants. For your restaurateurs who are on the call, my heart bleeds for you. I ran a restaurant for 6 years, and I can't imagine what you're going through. And I think that Congress should do more. End of editorial comments. There are some important CARES Act provisions for businesses. I mentioned them earlier. I'm going to get ready to wrap up in a minute after I go through these. Again, utilization of business losses. In the past, business losses were limited. The CARES Act suspended that for 18, 19, and 20. So if you had business losses back in 18, 19, you can go and amend your tax return and possibly get a refund. Net operating losses. Carrybacks of net operating losses were eliminated under the Tax Cuts and Jobs Act. The CARES Act changed that so that NOLs can be carried back as far as 5 years. Again, possibly freeing up some cash in the form of a tax refund. Finally, qualified improvement property. The Tax Cuts and Jobs Act made a change to this. If you have rental real estate and you have improvements inside the real estate, or you're a tenant with improvements inside, you should look at this. There's a possibility of going back and amended returns, changing the useful life, and possibly getting a refund. I do have a few more slides that are individual based. I'm happy to answer questions on those slides, at the end, or if my contact information I'm going to show you in a minute, but I do think it's important to turn this over to Angelo now. So the fine print, things are changing rapidly. This information is accurate as of today. It's not tax advice. It shouldn't be relied on as tax advice. Consult with a certified tax professional or a certified lender for advice and recommendations about these matters. Finally, here's my contact information. Again, I will make sure that this PowerPoint is given to the folks at the Monterey Bay Economic Partnership, and we'll get it out to you. Thank you very much. I'm going to stop sharing my screen and turn it over.
Thank you, Ron. So much information. And next, we're going to have Angelo get into some of the details regarding the PPP program. So over to you, Angelo.
Great, thank you. Pleasure to be here. I'm working on sharing my screen. Can you guys hear me?
Yes, we can. We can see your screen too.
And you can see the screen. Okay, excellent. Give me 1 second here. Let's see, there we go. I think I'm good now. Okay, well, pleasure to be here. Angelo DeBernardo, Executive Vice President, Chief Lending Officer at Santa Cruz County Bank. I'm joined with Credence Shaw, who's our Executive Vice President, Chief Credit Officer at Santa Cruz County Bank, who will be helping me during the question and answer period. A little bit about Credence. He's our local hero, 2020 hero. We were one of the early adopters of getting the PPP program rolling, and 371 million is how much we issued in this program to approximately 2,600 businesses, funding 34,000 jobs. And we certainly wouldn't have been able to do it without the talent and leadership from Credence. And he's also one of our search and rescue volunteers that was involved in helping out during the CZU complex fires. So the agenda today, we're going to just take a quick look back at the pandemic, talk about the EIDL program. We'll review the PPP First Draw, which is important to do because people can go back now and apply for the PPP First Draw. So we'll spend a minute talking about that. Also the forgiveness program for the first draw. We'll also talk about the second draw, and we will talk about the forgiveness for the second draw, and hopefully have some time at the end for some Q&A. So January 20th, 2020 was the first case of COVID-19 that we had in the United States. And then of course, we all know March 17th, the shelter-in-place order was issued for all non-essential businesses. And impressed with Congress, in 10 days issued the $2.2 trillion CARES Act that went into law. And of course, we know a lot about it, and Ron spoke about it. But the point here that I wanted to make is $349 billion appropriated for the PPP program, $10 billion for the EIDL program, and it was released by the SBA administrator just on April 3rd. So a small window of time. It was a brand new program. None of us knew very much about it, but of course the banks were expected to really become experts. But we were getting the information live, just like the rest of the world was getting it. And we thought it was kind of like being on Oprah. The whole country was like the studio audience of an Oprah show, full of small businesses getting these PPP dollars. So it came out on April 3rd, and one of the issues was that it was a first come, first serve type basis. When the money runs out, the program would be over, and it created a bit of a frenzy. And we all can remember during those times, everybody was really contacting their bank and trying to get their loans done. And of course, the funds did run out. April 16th, the funds were exhausted. The program closed. But not to worry. Hang on, I'm going to start my video here. I didn't realize I didn't have my video on. But not to worry, because August 8th, or on April 24th, they started printing more money. I call it round 1B, and $310 billion appropriated for the PPP program. So a total of $659 billion between the two. And that seemed to take care of us processing all of the applications that were coming in. And it did close on August 8th. But during that time, it was a very confusing period because they released it so quickly. There were so many unanswered questions. We were getting them all the time. SBA was issuing interim final rules to try to provide updates. We were counting, I think we're up to about 33 different FAQs that were issued. We sympathize with all the businesses who are looking for guidance that was specific to their business need, and the SBA just didn't address it with the early releases, and we had to keep up with all the FAQs, and we're still doing that today. There was one that was just released on Tuesday. I want to talk real quickly about the EIDL program, the Economic Injury Disaster Loan. It's certainly not a new program. We saw it during the '89 earthquake. Hurricane Katrina saw this program. It's an excellent program to try to help businesses with very favorable loan terms. They're 30-year fixed rate loans, 3.75% for for-profit businesses, 2.75% for nonprofits, no prepayment penalties. And you can use the money for pretty flexible purposes, working capital, operating expenses. There is a fundamental issue with replacing lost revenue with debt. So certainly understand that trade-off, but nonetheless, it's a really attractive program. No collateral for loans 25,000 and under, and for loans above 25,000, it's a simple UCC blanket filing that the SBA will record on the business. They are loans, they're not forgivable. However, there is a component of the EIDL program that they call the EIDL advances or the EIDL grants, and those were going up to $10,000. Many people received them in 2020. Looking on the SBA website, it currently says that they're not available. There aren't any allocated funds currently available, but the loan program is certainly available. And this is a program that you apply directly through the SBA. They're not administered through banks. You set up the payments through SBA, and And currently they are accepting idle applications. So let's talk about the first draw PPP loan. And again, I talk about it in detail here because they're open again for those that did not receive a loan the first time. And I'll talk a little bit more about some of the nuances there. But the program was designed to provide a direct incentive for small businesses to keep their workers on the payroll. And I read that because the program wasn't designed to make businesses whole on lost income that they experienced because of the shelter in place. The way they rolled it out in the design of the program was all about trying to keep workers on the payroll. The maximum loan amount was $10 million. It was based on 2.5 times the average monthly payroll. There's a couple little nuances in there. You know, you have to cap your employees that make over $100,000. But here's a tool that I wanted to share with you that we use. This is a real tool. We're using it today. We've been using it from the beginning on how we calculate it. So first of all, we need to get payroll information. And the IRS Form 940 and 941 are forms that businesses complete to provide payroll information to the IRS. The 940 is provides annual information. The 941 provides quarterlies. So here we can pull down either the annual number of payroll expense, or we can get all 4 quarters through the 941s. If they're a sole proprietor, the Schedule C can be used. If they hadn't filed their tax returns and prepared their Schedule C, we could use a P&L report here to capture their net income. We can also take into account health insurance premiums and retirement contributions. We add these items up and we get to a full number that we divide by 12. And this number, 57,777, represents the average monthly payroll times 2.5 times. So in this case, the borrower could receive a maximum of $144,443 in a PPP loan. Who could get it? Sole proprietors, independent contractors, self-employed persons, really any business that meets the SBA guidelines. So S Corps, C Corps, LLCs, and so on and so forth. They even made it available for some nonprofits. For example, the 501c3s. Maximum 500 employees or less, unless there's some exceptions that are allowed by the SBA. The design of the loan, it's a 1% loan, and it starts accruing interest the day the bank disperses the funds. The interest is part of is forgivable. So we're already processing and receiving forgivable amounts that are paying off the interest amounts. Loans that were issued prior to June 5th, 2020, they're 2-year maturities. They changed the rule at that time. So the loans that were done after that date have 5-year maturities. I'm going to talk about the payment deferment part in a different slide here, but I want to make a point on this slide that there's no collateral or personal guarantees required for the PPP loans, and there's no fees. The government doesn't charge, and the bank does not charge any loan fees. But it takes work. Businesses have to get organized. They've got to pull their information together on the bank side. It took a lot of work for us to be able to do, but the amount of dollars we're talking about, the time spent was certainly worth it. So let's take a look at this timeline that I think provides a pretty good illustration. The main point to start focusing on is the date the bank disperses the funds to the small business. From that date, the business has 24 weeks, which we're calling the covered period, to spend the dollars that they received on eligible expenses that they'd like to have considered for forgiveness. It started out at 8 weeks. They made a change. They extended it out to 24 weeks. If you got the loan at the time when it was 8 weeks, they allow you to make an election to extend it out to 24 weeks. So really everyone has 24 weeks of a covered period. Now, the other important distinction here to know is that 10 months from the covered period, loans are deferred. Loan payments are deferred. A business can receive these dollars. They can spend it during the covered period. As soon as they finish spending the dollars, they can apply for debt forgiveness, but at the from 10 months from the end of the covered period, if they have not received debt forgiveness, they're going to need to start making payments on the loan. This is a little bit misleading. It says deadline to apply for debt forgiveness. It's not really a deadline. You have until the maturity date of the note to apply for debt forgiveness. But if you get past this 10-month mark, you will have to start making payments. And there's really no reason for that. We tell people to put in their application as soon as they spend the money and they're ready to submit to the bank. So let's talk about the forgiveness. So the eligible expenses for debt forgiveness, payroll expenses, it started out at 75% of the dollars that you received had to be applied towards eligible payroll expenses. They have reduced that to 60%, which allows businesses to be able to use more towards other expenses, which they have defined. Mortgage interest related to the business, rent, utilities. They recently added work protection costs. So this is your PP&E, if you had to get plexiglass, those type of items. If you suffered any damage caused by looting or vandalism in 2020, you can apply PPP dollars towards those expenses, and other supplier costs and expenses. If you had to get computer software, a POS system, and so on to deal with the shelter-in-place mandates, you could use that. You have to provide documentation. You really need to be organized with your data. For example, payroll, we need a payroll summary, journal report that can come from your payroll provider, canceled checks, or perhaps the bank statements that show that those payments have been made. For rent, proof of payments, again, clear checks and copy of the lease. Utilities, mortgage interest, you kind of get the idea here. They want to see evidence of these eligible expenses and proof of payment. We recommend people set up a subfolder. Start saving these files electronically in the subfolder as you're spending the dollars so that you can keep it organized and it's there and available. It's just hard to do when you're a couple months down the line and then you're having to go back and try to organize the data. So we recommend collecting that data electronically along the way so that you can upload it. There is an employee retention criteria to qualify. It's pretty complex and we could spend an hour just talking about that. So I'm not going to go into it other than to say that they've increased the safe harbor benefits for businesses that have been shut down because of shelter-in-place state orders, and you cannot hire these people back because you're not in business. They've provided flexibility. So we're happy to see that. So how to apply? Most banks have set up an online application process. So you fill out these forms electronically. There is the form 3508. But I would first check with your bank and make sure that you're not wasting your time filling out the form when they're not going to accept it. They're going to want you to do it through their online process. But I do think it's a good idea to print out the form and go through it so you understand all the pieces and what you're going to be asked and what items that you will need to provide. So December 27th, most recently, and Ron made mention to it, 2.3 trillion in new stimulus dollars were signed into law. 900 was for the COVID-19 relief bill, of which 284 allocated for PPP. They did allocate some more money for the EIDL grant program, mainly for low-income and minority communities. There was three main changes that I want to highlight with this second round of PPP. Is first, for people that for businesses that did not apply for a PPP loan during the first round, they now can go back and apply for that loan. The second thing is that if you applied and received a loan in the first round, you can now apply for a second PPP loan, and we're calling those PPP Second Draw, the common name referred to it. And then there were other changes with regard to the rules of the program that applied to the first loan, the second draw, allowable expenses. The forgiveness became a little bit more favorable. So let's just go through some of the major changes. $2 million is the maximum loan amount. It's down from $10 million to $2 million. You cannot have more than 300 employees. So as far as size of your business, that's down from 500. And now they have a little test here that the business has to demonstrate that they've had at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So I'm going to share with you another worksheet that we use actively for processing these PPP loans.
So first, what we're doing is we're entering in straight from the borrower's application what they provided in the form. For 2019 and 2020 sales, we confirm that it's 25% or greater. I'll also mention if the loan request is $150,000 or less, it's kind of a streamlined process. We do not have to verify this amount in order to make the loan, but do know that to apply for forgiveness, you are going to have to provide proof that your revenues met this criteria. So we're telling people, do it on the front end. Might as well make sure you're going to have debt forgiveness versus waiting to the end and then being surprised and unhappy. What we do is we request the documentation from the client. The SBA is requiring that the P&L that's provided is signed by the borrower. That was a little bit of a nuisance because we started collecting it and then they came out with a new ruling. So we had to go back to all the people who had already submitted and tell them that they needed to sign it and resubmit. So we enter in that data. In this example, we collected the second quarter revenues for 2019 and 2020, confirmed that it matched the application, and therefore we were able to move this thing forward. So it's really important when you complete the application to make sure that your data is accurate and it will check these requirements. Other changes for accommodation and food service sectors, your hotels and restaurants, they've increased the loan amount that businesses can apply for from 2.5 times to 3.5 times. So there's a nice little increase. The way they're going to check it is they're going to look at the NAICS code that is identified for that business, and it needs to start with the numbers 72. Here is an example of a 72 here. This is the same business that could have received $144,000 in the first round, but because they can now ask in the second round 3.5 times monthly average payroll, they can get a PPP loan second draw of $202,000. So that represents an additional $57,777 for that business in the second round. So happy to see that. Also happy to see that C6s were included in the second draw PPP, and that would include our local chambers of commerce and visitor bureaus. I mean, the organizations that are very important to all of our small businesses. So we were happy to see this apply, and they can apply for the second draw. It doesn't allow them to go back and ask for the first draw, but it does allow them to ask for the second draw. Here's another example I wanted to highlight. If a business did not apply for the full amount that they could have applied for, in this example, again, they could have received $144,000, but they only asked for $100,000 and that's what they received. Well, they can now go back and they can request an increase to their first PPP loan of this $44,000 so that they can get what they left on the table in the first round. There's timing issues that are extremely important. You got to jump on this right away because when you receive these funds, you need to spend the money before you can get the second draw. The second draw is going to expire March 31st. So if this is something that you want to do, that you need to do, it's something that you've got to jump on right away. And you need to go back to the original lender that made the first loan for you in order to request the increase. Here's another example, and we had these cases. If you returned the money, we had businesses that applied and received the first draw PPP, and after receiving it, they heard all the news of people that shouldn't have received it, and they thought, you know what? Let's just give it back. I think we're going to be fine. We're not going to need it. Well, they gave it back, and then they realized, boy, that was a mistake. We should have kept those dollars. This is running much deeper, much longer than we anticipated. Well, as long as they paid it back, or they had the bank cancel it, and they didn't receive any debt forgiveness dollars from it, they can go back and reapply for the first. So we're happy to see that. Again, there's time issues. If you want to get a first and a second, you got to move on this right away, because as I said, you have to spend the money before you can apply for a second PPP draw, and the second PPP program is set to expire March 31st. The other thing that's different about this is that in the first round, when we were making these loans, banks were utilizing a portal called E-Tran. That's the way we communicated with SBA. We'd enter in all the applicants' data. We would submit to SBA through E-Tran. Everything checked out. We get a pretty immediate response with a number, an SBA number, which that number guaranteed that funds were now being reserved for that particular applicant, and we weren't worried about funds running out and them not getting it. The way they've done it now in the second round, they're not utilizing the PPP or the E-Tran portal. They're using a different process for banks to submit to SBA, and it's slower. There's more front-end compliance. We're hoping that we're going to get about a 24-hour turnaround time, but that hasn't proven out so far. It can be 3 days, a week. We're not really sure. We're in the early stages of it, but we know that it's not like E-Tran where we're getting the information back right away. We just have to go through a lot more checkpoints to confirm that the application is correct and eligible. So please be patient with your bank and understand the process has changed. Can you get audited? Can your SBA loan, can SBA audit your PPP loan? Well, the answer is yes. The Act appropriated $50 million directly to PPP auditing and fraud mitigation purposes. We know that all PPP loans $2 million and above are going to get audited, but they're doing spot audits, and we already are seeing them occur. We're seeing them for loans that are as low as $7,000 to some that are, $600,000-900,000. So just know the audits are happening. And if the bank is not asking you for all the documentation, just know that when they go through the audit, SBA may ask for it later. So please keep good records. Here is a sample of the second draw PPP application form. Just want to highlight, some of the areas you put in your average monthly payroll as we went through the exercise, 2 or 2.5 or 3.5 times that amount for your maximum loan amount. They want to know the number of employees that you have and check the boxes on where you plan to spend the money. And here's where they're asking for you to input your gross receipts from 2019 to 2020 to show that you had a 25% decline in gross receipts. There's several other parts of this application where you have to answer questions. You have to read through these representations here and certify them. I'm not going to go through all of them, but you have to initial and sign. And I just want to make the point, the important point, please be thoughtful and careful and truthful as you read through all of these and initial and sign. As they go through an audit, if your business did not meet the requirements and were not eligible, there are consequences that are material. And it's important to make sure that you go through and read and understand what you are certifying to. Okay, second draw PPP forgiveness. The point I think I want to make here is it's very similar to the first draw. They're looking at the same type of rules regarding maintaining the same number of employees, the loan proceeds being spent on eligible payroll and other expenses, as well as making sure that at least 60% of those dollars are spent on payroll. The other 40 can be on the other eligible expenses. So it's they're very much the same. How and when to apply for forgiveness. And this is, I'll start with the when. As soon as you finish spending all the money on eligible expenses, that's when you should submit your application. You have until the maturity date of the loan to submit for forgiveness, but remember that 10 months after the end of the covered period, you're going to be required to start making principal and interest payments on it. So no reason to wait. Get those applications in now. So how to do it, contact your PPP lender for application instructions. We expect those are going to be, for most banks, done electronically through their online portal. Make sure your documentation is together and communicate with your lender throughout the process. We have a loan portal set up at Santa Cruz County Bank. Our analysts working on it can post questions. Hey, we need additional information. Can you please answer these questions? And we want our clients to stay engaged, check in the portal, make sure they're in constant communication. So we're moving this along. Here is the loan forgiveness application. What I wanted to point out here is first draw PPP loan, second draw PPP loan. They've created one application that can be used for either of the two. So they've simplified it so you can get familiar with one form. With that, I'm going to conclude here to say we've already seen 33 FAQs come out. We know that there's going to be more changes that are coming. We know they haven't addressed all the issues. And with that, I'll end here so that we have time to open it up for questions.
Thank you so much, Angelo. That's a lot of information in a short amount of time. And we do have a few questions. And just to let our participants know, we can run a few minutes over. If you need to drop off, we will post an event recap with answers to the questions as well as the presentations. So let me go through some of the questions that have been asked of our speakers. One of them is EIDL offered a second time if you received it in the first round?
That is a good question. Credence, do you have the answer to that? I don't.
My current understanding is that EIDL is not being offered, like a second EIDL is not being offered. However, they are looking at doing increases to your current EIDL. So you would reach out to your SBA contact that you're working with at EIDL and kind of tell them you're interested in an increase, and they'll help you do that process.
Great, thank you. Okay, another question. My business has been closed since March 2020. All my employees are on unemployment. Do I qualify for any of these programs?
I can address the grant program. If you plan on reopening, your reopening costs, most operating costs that you have do qualify for the California grant program.
Thanks, Ron.
And that would be another one where I would look into the EIDL program. Those may be available for those also.
Great. How about employers with employees outside of the US? Do those costs also apply?
I saw that question in there and I was trying to look up the answer while I was coming in. The way I understand it, and I would ask them to kind of read the application closely. The way I understand it is that you're allowed to have employees outside of the US. The idea behind the program was for employees within the US. So your US based employees would definitely be eligible. The other ones, that's a little bit of a gray area that as a community bank, we don't run into very often.
Okay. Do I need to submit documents now for forgiveness?
We recommend. Yeah, PPP is my world right now. Documents for forgiveness, we recommend submitting them as soon as you can. Mostly because as time goes on, we don't know what's going to change. And right now, if you're sure you're going to be eligible for forgiveness, let's submit that and get that process going. However, we don't want people to stress about it. You have a lot of time. So you have your covered period, which is that 8 to 24 week period. And then you have a whole nother 10 months to submit the information for forgiveness to us before you need to make a payment. So there's a lot of time to do it. Don't worry about it, but do it as soon as possible.
Thanks, Credence. Okay, next question. Do any of these programs provide loans for micro businesses, especially those that do not have a lot of payroll?
Again, the grant program could. There really isn't a requirement to show that you have payroll. The requirements were listed. You'll get a list of them. You can check that website. They're really looking, the state is looking for you to use this money to get ready to reopen your business whenever it's ready, to keep it going as best as you can now, and then have funds available for reopening.
And I would say on the PPP side, there's no minimum loan amount. But again, as I had in the presentation, it's the design of the program was really to provide funds to keep workers on the payroll. So if they don't have employees, it makes it a little bit more challenging. But for the sole proprietors, they are able to submit their Schedule C or their P&L, and we can use their net income number as the number to divide by 12, multiply times 2.5, and that would be the maximum loan amount.
Okay, let's just do a couple more questions and then we'll wrap up. So this one's specific to the California Relief Grant Program. If you requested $5,000 for that grant program, but your gross income is over 100,000, would the grant give you 15K or 5K?
So I answered that question in the chat. The person went through Lendistry to get that grant application submitted, and I would suggest they go talk to Lendistry about that. I don't know, but Lendistry should.
Thanks, Ron. If you received a first round PPP and then an SBA grant for 10,000, is that going to have to be repaid on PPP?
Yeah, that's an excellent question. They changed the rule. The way it was originally set up is that if you receive, let's say, $100,000 PPP loan and you had a $10,000 EIDL grant, you could have spent all the money to be eligible for the 100,000, but the SBA was only forgiving 90,000, and they were requiring the 10,000 that you received in the EIDL grant to be repaid. They've since changed the rule, so now they're repaying all of it. They're not deducting the EIDL grant. What's important to talk about is that that change occurred after we've already received a number of forgiveness dollars from the SBA, and we have that residual balance still remaining. What we understand, what we're anticipating is going to happen is that SBA is going to be remitting those residual balances to the bank to pay off those outstanding EIDL grant amounts. So we're telling folks to hang tight. We're hoping in the next 30 days or so. It's out of our control. It's really when the SBA gets it to us, but we're hoping in the next 30 days that we'll be able to clear those residual balances. But any application going forward will receive 100% forgiveness without any deduction from the EIDL, assuming all their expenses check out as required.
Excellent. I think with that, like I said before, we will have the presentations and answers to questions in our event recap posted on our site. And I'd like to thank you for presenting today, Ron and Angelo. This was very enlightening, and I hope we got most of your questions answered to all attendees, and we appreciate your participation today.
Our pleasure.
Thank you
very much.
Yeah, thank you very much. Angelo, I told you guys would have the heavy lifting. Thanks for doing that.
All right.
It's a team effort.
Bye, everyone.